Hi, good afternoon. I hope you can see my slides. So I won't spend too much time on going through the issue-specific factors. I think Ray covered it, but basically what we're offering is 20% stake in the company valued at 500 million rupees for based on a pre-money valuation of 2 billion rupees. The IPO will open on the 22nd of December. All of the IPO proceeds will be reinvested in the company to develop new products and to further expand the growth and scale of the company. So I won't spend too much time on the industry and industry-specific factors because they're largely self-evident. In the post-pandemic era, the pandemic has had acted as a massive catalyst for the adoption of e-commerce. So in countries which are leading the world in terms of online retail, the share of online retail as a percentage of total retail has increased to about 25%. That's in China. And also in other countries all throughout the developing world, we have seen massive double-digit growth in the use of e-commerce post-pandemic. So based on a survey done by Shopify, about 80% of e-commerce customers who used online retail during the pandemic have indicated that they will continue to regularly shop online. So, many companies tried to get into e-commerce too late during the pandemic, but not all were able to thrive because they didn't have coherent e-commerce strategies or their supply chains and logistics set up. So the companies that did benefit from the pandemic were the companies that have been thinking proactively and were ahead of the curve in having their online retail strategies in place. The Asia-Pacific region, particularly China, is leading the adoption of e-commerce, but overall, if you take the world as a whole, e-commerce is expected to exceed about 25% of total retail in the coming years. So if you take Sri Lanka, currently Sri Lanka's e-commerce market is valued at about $90 million, which is very small. It's about 1% of total retail. So the total addressable market for e-commerce, even in Sri Lanka, is massive because the penetration levels are so low. So some of the factors that will enable greater penetration of e-commerce is obviously factors related to digital literacy, like the use of mobile internet, fixed internet, use of smartphones. All of these metrics are improving as you would know. So already we have about 8 million social media accounts in Sri Lanka, and about almost 20 million people have either credit cards or debit cards which can be used for online transactions. So if you take the retail or new retail or e-commerce landscape in Sri Lanka, you can broadly categorize the players into four different baskets. So you have Daras, Kapruka, Takas, and so on, who are the pure play e-commerce players. Then you have the e-retailers like Zigzag or G-Flock. Most of these are fashion, fast fashion brands which are selling online or selling a niche product online. Then you have the general large retailers like the supermarket chains and the white goods retailers like Singer and Abans and SoftLogic and so on, who also have their e-commerce websites. And finally, you have the global e-commerce players like Amazon, AliExpress, and eBay, and so on. So whilst many of those global players were shipping to Sri Lanka before the pandemic, now because of the disruption to supply chains, you would have noticed that even if they are still shipping, the shipping costs have become prohibitively expensive, which makes which makes it less viable for people to purchase from them from Sri Lanka. If you take how the consumer needs are evolving, it's generally the upper middle income households that would be using e-commerce and modern retail and so on. So as Sri Lanka progresses up the per capita chain as a middle-income economy, we would expect those factors also to contribute to the growth of e-commerce. There are currently about 1.1 million households who can be defined as upper middle income. Another enabling factor is that in the last few years there's been a lot of developments in the payment gateways and fintech arena, which has helped e-commerce, because previously getting a payment gateway from one of the banks was very difficult for most small retailers and so on. Now we have a lot of fintechs who have come into that space, who are facilitating greater online transactions. Coming to the company, so as Dulit said, Kapruka was started by Dulit almost 20 years ago, and the reason that it has taken maybe 20 years to come to this level is partly because it's a bootstrap company where they have not raised, unlike other almost all other e-commerce players, they have not raised capital from outside sources or borrowed from the banks in a significant way, and also because the adoption of e-commerce in Sri Lanka up to now has been somewhat slower, but it's accelerating very fast, as we can demonstrate to you. Also, they are the first e-commerce entity in Sri Lanka to expand outside Sri Lanka in a meaningful way, and they're also Amazon's master seller in Sri Lanka. So like I said, Kapruka has ventured outside Sri Lanka, where they have their warehouses in the US, UK, and Australia, which they use to facilitate exports from Sri Lanka for certain selected brands like Dilma Tea and Akbars and so on, to be resold using online platforms in those markets like Amazon, Etsy, eBay, Walmart, and so on. Also, Kapruka is unique amongst all known major e-commerce players, in the sense that they have their own brand products. So when we say own brand, we don't mean white label products. It's products that they manufacture or produce in-house, like bakery items, flowers, and horticultural products, and so on. They have their own logistics piece in place, both for delivery of perishable goods, using same day or next day delivery, plus also delivery of non-perishable goods using an affiliated company. They do all their own order fulfillment using their own warehouses and delivery fleet. So, like I said, although Kapruka's business model is somewhat similar to, can be said to be somewhat similar to some other global players, the only entity having its own in-house production and own proprietary products. So this is a snapshot of the group structure. So what you see is their new fulfillment center, which will be becoming operational in January, February of next year. So the group structure, we spent a lot of time and effort in restructuring the group prior to the IPO, so that investors don't need to worry about things like transfer pricing and so on. So all the entities which are having inter-company revenues have been brought under the entity that is going public, so that there's no transfer pricing outside the group and so on. So Kapruka Productions is the entity that produces bakery items, fruits and vegetables, and so on. TechRoot is an in-house IT company which does the product development for the IT platforms, ERPs, and so on, most of which are developed in-house, so they're not using expensive third-party ERPs and e-commerce ERPs, which entail very high costs that they would otherwise incur. Kapruka e-commerce is the entity that's doing the general e-commerce business, and Global Shop is a cross-border shopping service in which they have a 25% stake is coming under the entity that's being listed. So in terms of brand, I won't dwell on it too much. I'm sure most of you would have used Kapruka. So as you know, a lot of the leading brands in things like electronics, restaurants, FMCG are on the Kapruka platform. So Dulit's profile also, I'm not going to spend too much because we already covered. So he's a well-recognized entrepreneur whose recognitions have been awarded multiple accolades. He has also founded Java Lounge, which is probably the largest coffee shop chain in Sri Lanka, and Grasshoppers, which is like a aggregated delivery service. So coming on to Kapruka's revenues, as we mentioned, they're having about 50% of their sales generated from outside Sri Lanka. So those are dollar revenues. So that's a very favorable position to be in the current context of the balance of payments crisis that we are having. In terms of their sales, about 27% of their sales comes from their own brand products. So so some people ask, why bakery goods and so on and not electronics. So as you know, these are very high margin products compared to selling electronics or accessories or typical things that you would find on other e-commerce platforms. So this is one of the key factors which allows Kapruka to have the kind of profit margins that they're currently having. So the cross-border export operations really started this year. So at the moment, or as at the date that we did these numbers, it was small, but we expect that to grow strongly in the years to come because the total addressable market there is not limited to Sri Lanka because you're catering to much larger addressable markets in the US and Europe and so on. So this is a snapshot of the group's financial performance in the last few years and what we are projecting out for the rest of this financial year. So as you can see, growth has revenues have really surged in the current year. So intuitively, you may ask why wasn't revenue growing as strongly in the last financial year? So that's because it was the COVID year. So even though there was a lot of demand for e-commerce because of the sudden lockdowns and the stress on the supply chains and the logistics, Kapruka in common with many other entities were not able to cater to the demand that was there, and also there was a lot of additional costs that they had to incur during the COVID year to get the supply chains and the logistics going during the COVID period. So in the current year, for the 7 months ended October, they have already achieved revenue of 1 billion rupees versus the 1.5 billion we were forecasting for the full year, and profits of about 130 million rupees versus the 205 or so that we were forecasting for the full year. So most likely they will be exceeding our forecast, which we had used for the valuation. So what you can see is that with the scaling up of the operations, you're starting to see operating leverage kick in, which is why you're seeing the profit growth far exceeding the growth in the top line revenues. And also significantly, the company is now generating positive free cash flow. So that's a very significant achievement for e-commerce companies, especially a company which has been bootstrapped and funding the very significant capex that they have incurred using their own internally generated sources and a little bit of debt. So this is not entirely like a software company, because it's not only the development of the product and acquiring customers. They also have to invest a lot in physical infrastructure like fulfillment centers, logistics, transport infrastructure, and fleets, and so on. Yeah, so what you can see from the ratios is that the strong run rate in revenues has allowed capex to moderate as a percentage of sales, and you're seeing the operating leverage ratio, if we measure it as change in EBITDA over change in revenue has increased significantly. So that means for an X% increase in revenue, EBITDA will grow by a multiple of that, is the expectation. You can also see increasing capital efficiency driven by improving margins and better asset utilization because leverage has been coming down historically. So at the moment, they're moderately geared with about 150 million in net debt. I won't spend too much time on that, but these are our projections for the different revenue categories. So we are expecting cross-border exports to be a major contributor in going forward, even though it may be having somewhat lesser margins than, say, bakery items and certain other high-margin products. Also, we can see that they have had a compound annual growth rate in their customer base of about 61%. So they currently have about 2.7 million customers, where the average basket value for an expatriate customer is about $40, and for a local customer, it's about 5,000 rupees. So coming on to some e-commerce metrics, they have some fairly favorable metrics in terms of the conversion rate, where the conversion rate is about 6.8% compared to the global average of about 2.3%, and their bounce rate is about 14% compared to the global average of about 53%. So again, these are highly favorable metrics. So customer acquisition costs. So this metric looks very impressive. So I'll explain why that is. That's because because they're not spending aggressively in acquiring customers. So because of that, with the little amount that they spend on customer acquisition, their cost of acquisition comes to about 250 rupees for a customer. Obviously, if you try to acquire a lot of customers in a market like Sri Lanka, where there's a very small addressable market, 20 million customers, you'll find that as you spend, the incremental cost of acquiring a customer will continue to go up, and the incremental amount that you will earn from that customer will go down as you acquire the more marginal customers. But at the moment, based on their inorganic growth, they're having a very favorable metric here. Also, in terms of demographics, about 60% of their user base are in the age group of 18 to 35. So that's the important demographic going forward, because those will be the customers that will be, seeing their income rise as they progress through their careers and start families and so on. And they're more likely to be repeat customers for e-commerce on these platforms. So board of directors, I won't spend much time on Dulit and his wife, who was also a founder of Kapruka. But recently they have invited a number of new directors to the board, independent directors, including Mrs. Priyanthi Pires, Mr. Tishan Subasingha, and Mrs. Manohari Abesekara. So I won't spend too much time on their profiles because he's all very well known and well respected corporate personalities. Again, Kapruka's team of senior management, I'm not going to spend too much time on this. So like Dulit said, the management team is the key. I mean, that's the thing that can't be easily replicated. So all of them have 5+ years of experience at Kapruka and in their respective fields in developing products and growing the business at Kapruka. So coming on to the investment thesis, as I said, our pre-money valuation is 2 billion rupees, which works out to a multiple of 10 times forward PE based on financial year 21-22. Financial year 21-22 profits, which we have forecasted at about 200 million rupees. So that's a discount of about 20% to the DCF valuation that we have arrived at, which is about 3 billion rupees. So out of the 500 million that is being raised through the IPO, about 100 million is earmarked for upgrading existing technologies, 200 million for, and the balance 400 million for launching new platform services, which was covered by Dulit, so I'm not going to go into each of those in detail. So when it comes to upgrading infrastructure, the money will go into expanding customer reach, improving and developing their new iOS and Android apps, improving the wow factor in their websites and apps, improving customers' product choice, supplier support, and delivery support. Like Dulit mentioned, we're expecting to launch about 3 new platform products. One is the Kapruka Central, which is a marketplace platform for premier customers, a used goods marketplace which will go as soldout.lk because they don't want to dilute the Kapruka brand by bringing it under the same brand, and a B2B marketplace product as well. And also, in addition to that, they will be expanding their export operations using their own label, in this case, white label products as well, like cinnamon and so on, which they will be selling in the international markets. So just a snapshot between Kapruka and the local retail peers. You can see that Kapruka's metrics in terms of revenue growth, EBITDA, revenue CAGR, EBITDA CAGR, and so on, far exceeds the listed retail players that we have. Of course, certain retail entities, it's because they act as conglomerates, it's difficult for us to carve out the retail segment separately. But with the standalone retail players, the Kapruka's metrics compare very favorably. Also, in terms of their valuation, in terms of PEs or PEGs, it's coming at a discount to those players, especially when you factor in the faster growth, the better GP margins, and the far superior return on capital employed. Also, when you compare with global e-commerce players, so as Dulit said, it's many e-commerce players are still scaling and trying to acquire customers rather than focusing on profitability. So when you look at revenue, profitability, and so on, Kapruka is ahead of almost all of them in terms of profit margins, GP margins, return on equity, and so on. Especially when you carve out the when you exclude the marketplace and cloud-based players, because Amazon and so on, they make very low margins on their core e-commerce business, and they make most of their margin on cloud services and so on. So when you take that out, the metrics look even better. Of course, most of those players are having very high valuations, like 100 times PE, maybe 7 times price to sales, and so on. That's partly because of the huge addressable markets that they have in those countries. So because we don't have that same kind of addressable market, we are not pricing it at the same levels. So basically, these forecasts and the assumptions that we have used to do our forecasts. I won't go into it in detail. If analysts have any questions and so on, they can discuss it with us. But basically, our forecast is in line with the current run rate of the company and the margins and so on that the company are currently having. Going forward, as I said, about 20% will be with the public and 80% will be with the existing shareholders. So to summarize the investment thesis, Kapruka, as we said, is the pioneering e-commerce brand in Sri Lanka. It's a household name. It has a unique and differentiated business model, which is backward integrated. They have a strong expat customer base deriving dollar revenues. It's a very attractive valuation, and they have the ability to grow further with the new platform and other products that are being launched. So that summarizes, that wraps up my presentation. So if you have any clarifications, you can send it through the chat box, and we'll try and answer it. Thank you.
Thank you, Shahan. Good evening. We would now like to open the forum for the questions that we have received. So I think you will be the most suitable to answer. In Sri Lanka e-commerce, is Kapruka the market leader, or another competitor like Daraz is the market leader? I will combine another question with that as well. What is the difference between the business model of Kapruka and Daraz?
Yeah, so Daraz is, I can't speak for Daraz, but from what I understand, it is a complete marketplace, which means it is a platform where you connect sellers and buyers, and they charge a commission. The problem with that I see is that you have very less control of the type of items you sell and the quality of the goods and the reliability of those. So therefore, we actually stayed out of that model for a long time. But we are now venturing into that model as a premium marketplace where we will, handpick and red carpet certain, large brands to be on the Kapruka Partner Central and not worry about getting their brand diluted by being on a very open marketplace. So that is our approach at it. But if you look at, I don't really consider Daraz as a direct competitor. Their business model is different from ours. But I must insist, we are talking about less than 1% of retail. Every time I get the question, who's your competitor? I'm like, it's not some website. It's the brick and mortar shop. It's the mall. It's the kade. It's the polar. It's that. So 99.5% of my customers go to these shops. And their children, their next generation is probably going to go online. So that's my market, and that is my competition that we want to go after. But once the e-commerce market goes to 6-7% of retail, like it has in the US and in mature markets, yes, then we have to seriously worry about the online competitors.
Is Java Lounge and Grasshopper under Kapruka or are those separate entities?
Java Lounge is not under Kapruka. It is fully owned by me separately.
What about Grasshopper?
There is about 1.2% stake by Kapruka. Rest is owned by a venture capitalist investor from Avishka Venture Funds and 2 other co-founders.
How are the import restrictions going to affect Kapruka global shop operations?
It will affect global shop in a positive way because we have a large credit line with Amazon. So we are able to keep ordering products behalf of you and do the clearance, and the demand of wanting to bring down these products is now even higher than before the pandemic because AliExpress and other small, the Chinese guys are unable to ship products as they used to before. So actually our demand has gone up. In fact, during Black Friday, we had to close shop because we couldn't keep up with the demand.
Thank you. Shehan, from a long-term investor's perspective, is there a specified dividend policy?
Yeah. So what we have stated in the prospectus is that Kapruka, in common with other e-commerce and tech companies, believe that there's no need to start paying dividends just yet because they have a long runway ahead of them, and the money, the profits can be reinvested in the company to earn a return much higher than their cost of capital. So if they run out of projects to invest in, or they see the returns coming below their cost of or their target cost of capital, then they will start paying out dividends. Yeah.
How much of Kapruka's revenue is from, it says from Western market, but I believe, is it in the form of foreign exchange?
Yeah, it's 57, I think. It was there in the, it's about, yeah, it's over 50%, about 57% is in dollars.
And Dulit, does Kapruka have an obligation to convert the foreign currency into LKR with the government's new regulations?
No such enforcement on us. We used to convert as and when we need cash flow.
Okay. And how is the logistics logjam affecting Kapruka's operations?
Say that again?
How is the logistics? It's all jammed up at the moment. So how is the backlog and things affecting it?
Are you talking about the global shop or roughly?
Overall?
General?
Yeah, generally.
Oh, I see. Oh, you mean ocean freight. Okay. So it's a common problem, right? It's not a problem for just one seller in Sri Lanka. Yeah, we are seeing slowdowns and challenges in supply chain, but that's a overall it's a blanket problem that everybody faces. So therefore, we don't have a certain disadvantage in that space. So it's a green field. But we are working through, just like every other retail shop in Sri Lanka, we are working through those and managing to source there. I can't name any category that we have delisted saying, look, we don't sell this anymore because we can't get it into Sri Lanka anymore. So we always find a reseller or existing inventory to trade.
Thank you. When it comes to sold out, have you underestimated the advantage that the early adopters and the established classified advertisers have in the market? How are you going to compete with them?
See, it's a very low capital intense project. And it's most of the funding or the seed money will really go into developing the platform and running, getting a proper team together. So it's not like you are risking too much capital while there is one established player here. And normally in any developed country, you will find about 3 to 4 established classified players in Sri Lanka. So I see a large gap in there, and it should be almost greenfield.
Okay. Shehan, what is the reason behind the significant increase in the net profit margin in financial year 2022? And is there any non-recurring items that are considered?
Yeah, so like financial year ended March 21 is not a very representative year for the business because of COVID, like we explained. So there were, because of the lockdowns, there were certain months that the company was not fully operational, additional costs had to be incurred. They couldn't cope with the demand for the products, so orders couldn't be fulfilled and so on. So because of that, financial year 21, the revenues were lower than what it would have been, and margins were also lower than what it would have been. So 2022 or this year is a better representation of the normalized state of the business in the the new economic or the new normal environment that we have. So you can see that because revenues have grown very significantly in e-commerce, economies of scale begin to kick in because of advantages in delivery. So I think as Dulit was saying at another forum previously, they were doing 1 delivery for every 3 kilometers, and now they're doing 1 delivery for every half a kilometer. So it's many magnitudes, orders of magnitude more efficient in things like deliveries and things like that. So that's why you see that steep ramp up in the margins, especially in EBITDA margins and so on, whereas gross margins and so on, that is also higher, but not at the same scale as the EBITDA and the net income margin. So that's because of economies of scale and operating leverage.
Thank you. Dulit, the ad and matching algorithms, AI, ML codes, etc., are those developed internally, or do you get an external vendor to provide the services to you?
The core systems in Kapruka are always built in-house, and that's something I took pride in from the beginning of the company. But if, like for example, our search recommendation engine, we are not going to redevelop the wheel on that. We would just go and buy it from somebody and integrate it inside. For example, our ERP system, we would use the ERP Next, which is one of the largest open source ERP systems, and build it in-house. So always when it comes to developing new technology, we always look inside. And if you see a great product out there that makes, because we are trying to move very fast, we will go buy it. If not, we will always give preference to developing in-house.
Okay, thank you. Do you have any plan to accept cryptocurrencies in the near future with the support that is being given by the government as well in the recent times?
Yeah, certainly, but we already accept cryptocurrency, and to be honest, it's very cosmetic right now. I think last month we got like only 30 orders from crypto, but it's something nice to have and say that you are accepting it, but I really don't think it's like going to be some sort of a big driver.
Okay, and do you expect any sort of regulations to be brought into the e-commerce industry in Sri Lanka?
I personally wish that e-commerce gets labeled as retail, so you will not get some sort of a stepmother treatment one day if you are completely separated out of retail. I think even in other developed markets also, they are considered as retail. The only thing that Kapruka is missing is a shop, right? Everything else is kind of the same thing. You have the same kind of inventory, you have a trading stock. So I prefer it to be coupled with retail as much as possible, but maybe there should be some regulations coming into marketplace laws and also some sort of a consumer affairs regulation on businesses that are coming into e-commerce to have a certain rating system and registrations like that, but I like it to be flat as possible.
Okay, thank you. When can a mobile app be expected, and do you have a forecast as to the performance of the mobile app?
Yeah, so we already do have it. We are not really pushing it as much, and some of the proceedings will actually go into really harp on that. Our mobile web is almost as good as an app. We are roughly about 38% of all transactions actually come through our mobile web. When you go to kapruka.com from your browser, it really acts like an app. That's what we've been really focusing on at the beginning. But there will be a fully blown app, which a lot of features like live tracking of your order, the different kinds of notifications, all that is on the way.
Okay. Shehan, do you think higher margins will be sustainable?
Yeah, so like I said, I mean, at GP level, it depends a lot on the product mix as well. So because as Dulit explained earlier, they have not been going after revenue at the cost of profit. So, that's why it's at the moment they're not a marketplace product. It's a non-marketplace model. That's because they curate the inventory based on what gives the highest margins and so on. So that's a factor that's within the control of partly within the control of the company. So yes, I mean certain businesses as you scale, maybe like exports and so on, maybe slightly lower margin, but much higher volumes. But beyond the GP level or below the GP level at EBITDA levels and so on, we think those margins are sustainable because, like I explained, economies of scale and operating leverage. So as the revenues grow, you get more efficiencies in deliveries and those areas which help to support those margins. Yeah.
Thank you, Shehan. Ray, are there any preferential employee share allocations at the IPO?
No, there will be no preferential allocation to employees at the IPO.
And so, given the time limitations, we will have to take up only a few questions. So, Shehan, as a last question, how can an investor apply for the IPO? What are the options available?
Yeah, so basically 3 methods. I mean, you can do it the usual way. You can download the application from the CSC website or the special website we have set up, which is ipo.kapruka.com, and you can fill it out, and along with your check payment, you can give it to any of the brokers or the designated bank branches, certain designated HMB bank branches. You can do it online, where you can again download, fill up the application, scan it, and email it to the registrars at the email we have given, along with the online transfer receipt for the funds. The proof of the funds have been forwarded to the IPO account, or you can use the CSC's mobile app also to apply online.
And Shehan, when do we expect trading to commence?
We can't give a definite date because there's a lot of IPOs happening in November, so it's a bit really beyond our control because registrars need to process all those IPOs and make the refund payments and so on. So, but obviously we'll push them to start trading at the earliest after closing the issue.
Yes. One final question to you, Dulit. You have appointed several new directors. What is the future strategic plan of appointing them? What do you expect to gain in terms of for Kapruka?
The question is about what are the future plans for direct appointments?
Yeah.
Okay. No specific plans. I like to take it as it comes, and I like to work with. I want directors who can actually work with me, not for the profile, but the chemistry and the way they understand e-commerce. So I don't have much of e-commerce expertise finding from Sri Lanka right now, but don't be surprised if I manage to actually get somebody who has a lot of experience with a large player like in ex-Amazon, ex-eBay kind of a person also joining us in the future, but I will be trying things like that.
Thank you, Dulit. Thank you, Ray and Shehan as well. There were a few questions which we didn't have time to answer, so you can always get in touch with the equity team. We will be happy to help you, so you can drop us an email or give us a call. We will get back to you. And on behalf of Kapruka and Equity, I would like to thank all of you for your participation, and we would like to see your support at the IPO. Thank you.